Thanks for joining us. This is The Economy with me, Ibrahim Sani. Here we are still unpacking the budget 2026. Because we've had enough time, slightly over a week now, to understand and digest the budget a bit, we can then discuss what can be the implication coming from it. Here to discuss this and more is a good friend of the show, Soh Lian Seng, the head of tax at KPMG Malaysia. So let's talk a little bit more about the initial reaction from the budget. As I mentioned, we've had maybe 5 or 6 days now to sit down, think about it, and perhaps understand what kind of questions we need to ask from the details of it. For instance, what is your top level, I guess, comments coming in from Belanjawan 2026?
Yeah, thanks, Brian, for having me. I think honestly, when you look at it, I feel that budget 2026 is a kind of a heady hand in the uncertain time, in terms of that. It's not so flashy, but I think it's focused. Yeah, and of course, if you look at it, I have been saying that this budget is cautious and but bold in their direction. So they are actually seeing some commitment, a continuous commitment in terms of the fiscal discipline, in terms of deficit, that how they're going to project it to narrow it further. That's my first impression.
Okay. Yeah. The numbers have been said by many of our colleagues on air, off air, in publication, comments, writings and so on, but we'll still repeat this. 421 billion expenditure for budget 2025. 419 billion expenditure for this year. I, for one hand, am not always applauding budget growing every year. I think that's scary, actually, if you ask me. So for the budget expenditure to decrease by 2 billion, I feel, this is my personal opinion, we're on the right track. Also, complementing this notion is that even though it's a slightly less expenditure budget, year on year, 25 versus 26, there is clear overtures in terms of increasing revenue, tax revenue by 2.7%.
Yeah.
Slightly above 300 billion ringgit and so on.
Yep.
So already I can imagine, okay, tax collection has to be tip-top, enforcement has to be there, supervision has to be there. But what needs to have happened to ensure that budget 2026 is going to be implemented as per aspiration by our government?
Okay, the way how I look at it, I think if you look at the expenditure that they have focused on, there are quite a few sectors that they're focusing on. I think in particular the agriculture. They actually move into a lot of initiative. If I were to compare the Belanjawan analysis, the sector, I think the amount of spending dropped significantly from the 2025 to 2026 estimation. So this could be one factor when you're talking about the drop of the expenditure in terms of how the figure being determined from that reason. Of course, if you look at it this year, when they announced of 470 million instead of the 421, there's a different category where they're talking about some expenditure allocated for GIC for that. Probably in the past years, it could be there, but it's not being segregated out. So the detail or mechanism, I don't have it with me now, but it's from how the analysis work out.
Now, this is interesting. You're right. The aspect of GIC, GLIC, GLC to come in has always been there, but more of an unbudgeted amount and more of a notes towards the budget. For it to be included in this budget and for it to be summarized to 470 billion, is this expected by your end, especially one who has been observing the budget for maybe 10, 20 years?
My view, before the budget, I was expecting more of a moderate budget for this year. Of course, I did mention to say if this budget continue to emphasize on Madani vision, where you're talking about raising the floor, where the rakyat is to be taken care of, then I won't be surprised that the amount of the budget now being expanded from that perspective. Of course, the detail we need to analyze further, but that will be my comment as to the first impression on the budget.
Let's go back to your core competency, which is head of tax. We'll discuss a little bit at length about the carbon tax.
Yeah.
But this would be the first budget in recent memory that there would be no introduction of no new taxes. Under the same breath, we're going to increase tax revenue by 2.7%. How do you factor these two elements in?
If you look at it, I think there are pockets here and there where with the expansion of the scope, no new taxes, put aside the carbon tax, but I think there are two that when I look at it, the government actually introduced the 2% on the profit distribution.
Yeah.
That is something new, but probably from the broad category is an expansion from the dividend tax. That's one. I think the other one that is talking about is the stamp duty for foreign buyer from the 4% to 8%. I think these are the two new ones. But how I look at it, this is just announcement. What they call it, a headline of what is this budget all about. But I think to me, what is important, what is our new storyline? This is where the finance bill, guidelines, engagement got to come in fast as to like what to provide certainty to businesses and taxpayer. That is how I see it.
But do you think that it's getting clearer now in terms of how businesses can do their tax planning?
Well, I'm still waiting for the detailed guideline from the government in terms of that. Yeah, I hope when weeks come, it will be more clearer to the businesses.
Let's talk about individuals now.
Yep.
I think this is the part where many of us can resonate with. Rakyat getting a lot in terms of cash aid, tax reliefs, and of course the kind of headlines including Sumbangan Asas Rahmah SARA, which is 100 ringgit by middle of February. We're looking at STR as well as SARA for next year to be increased by 15 billion, coming in from subsidy savings, coming in from the Welfare Department or Jabatan Kebajikan Masyarakat with an allocation of 3.1 billion there. We're looking at more than 560,000 people being the recipients of this. Does this help the economy, I suppose, where we put cash in hand and people, I guess, getting more direct cash aid and cash access?
Well, from that perspective, it really supports the Madani vision, where we are talking about how to raise the floor and the tagline of no Malaysian is left behind. That would definitely help in terms of that, because that will actually contribute to the spending by the individual household. From the tax perspective, yes, there are quite a number of relief that has been introduced. In fact, the focus is more on those OKU families. You're talking about childcare, you're talking about healthcare and all that. But what is important that I observe from the Belanjawan analysis, the expectation of the collection from individual taxes, in fact, based on their projection, there will be an increase of 4.2 billion. So knowing what has been announced, there's only additional taxes that perhaps can collect from here will be the 2% of the profit distribution.
That's basically the new category, lah.
That's basically the new category. But even for that category, it's very interesting to also note how would then the individual at the high net worth be affected. Right now, the question here would be, as an individual of high net worth, they may be receiving a different category of income. Employment, you continue to be taxed under employment. If those individuals who have received corporate dividend in the past, 2%. Now with this 2% of profit distribution, the ambiguous question would be, would it be classified as one to earn the 100,000 threshold? Or is it this 100,000 threshold is given to a different category of income? Yet to be seen, because finance bill is not out. We need to look at it, the wording of the legislation, because this currently remain unclear. So the jump of 4.2 billion, very interesting to note whether what is the portion that is expected to collect from this group, plus perhaps the new individual taxpayer that being registered. Or there's another angle, is that means that the hasil going to increase their enforcement on these high net worth individuals.
Speaking about supervision and enforcement, what's your comment on increasing the operational expense for enforcement, i.e. the OPEX for LHDN, for SPRM, for instance, or any other agencies that is meant to tighten the leakages? Do you see an increase beyond your budget, or do you feel that they have to work with peruntukan sedia ada?
My feeling is that I think in the current time, when we talk about productivity, especially when you look at some of this initiative, even when we talk about the new incentive team, also talking about KPI, my view that as a start, it should work with the current peruntukan. However, if there's a new initiative that you require a special skill to actually venture into what need to be done, then perhaps the additional peruntukan is to beef up or upskilling that category. Otherwise, as a general rule, the way how I look at it, yeah, we should work around within the current peruntukan.
On top of the headcount and management costs, one is also looking at capex and improvements of automation, as well as AI mechanisms to improve on the collection. Is this an area of concern for you to see our agencies from LHDN to MOF and more, to see more automation and more AI being implemented so that we can actually tighten that enforcement level and supervision level?
Yeah, I wouldn't say it's a concern to me, but I would like to comment that in fact it's a good initiative what the agency has done so far. When we talk about hasil, I can see a lot of improvement in terms of the collection effort mechanism of collecting taxes, past taxes. I think that effort should continue. Now, in terms of using AI, obviously I don't have much detail of that, but I think in terms of agency together with the profiling department, that can be enhanced further to go into the target. Because when you look at taxpayer in a country, if you apply the pyramid scheme, for example, generally, I believe most taxpayer in the country wants to pay the right amount of tax, which actually fall down to the base of the pyramid. Now, what happened to the top? That is where we need this sophisticated tools to identify those that decided from day one not to comply with these taxes.
Yeah.
And this should be the group that we should go after too.
Yeah.
Yeah.
But details are scant, I suppose, coming in from this budget.
Well, the details yet to be seen,
Yeah.
but I suppose this will fall back to the implementer rather than the policymaker.
Oh, I see now.
Yeah.
All right, back to that question of implementer. I hope the implementer has enough firepower to actually carry out, because I don't know about you, but I have full faith in our LHDN, for instance, to do what is needed to be done. We got agencies and, of course, bodies like CTIM, a member of your own body, the Chartered Tax Institute of Malaysia, to actually advise the MOF, Treasury, on how best to improve on the allocation of taxation on tax evaders and people who game their tax planning, as well as the so-called Mahakaya lah. I think that element of trying to see how we can do best in terms of the pillar that we have right now is also important to be seen, and I think a lot of us, a lot of our viewers can agree with this now.
Yeah.
Before we go into the business element of taxation, I also want to talk about broadening the tax base, which is always the evergreen question that I ask all my guests, including you. Actually, I don't remember the number of times I've had you over. Definitely more than 5 times. I'm wondering whether or not it has been 10 times since the days of my BFM days. But do you feel that this budget is doing anything to broaden the tax base, which we know is going to be very narrow compared to our peers in the region?
Well, if I were to compare to last budget, based on the announcement, I feel the expansion, or rather the base, has not really so wide compared to last year. But take, for example, the one I just mentioned about the profit distribution. There's one good example how this is being expanded. Other than that, if you were to look at some minor details of those changes, it may look like an expansion, but then looking at the detail, it could be review of certain condition that perhaps being tightened. Yeah, but then again, I don't have the further details, but this is just a first impression by reading at the budget speech together with those appendices. For example, like there's one review of incentive of giving scholarship, for example.
Yeah.
If you notice that in the past years, this incentive already there, but the one that the category of education level they've given in the past include master and PhD. But this one, if you notice, the master and PhD has been taken out, number one. Number two, obviously they also included the household threshold as one of the conditions before this is being given that deduction. So it looks expanded, however, the minor here and there may make it more tightened or rigid in terms of claiming.
So we're also, we would be remiss if we don't mention for the education sector, for instance, free education is going to be given to 5,800 people. TVET allocation has been pumped up from 5 billion plus to 7.9 billion. Bumiputra education collectively with Yayasan Peraju, UiTM as well as MARA has been increased to 6 billion. These are awesome things, if you ask me, especially when we talk about upskilling and reskilling our talents to embrace a little bit more tech, a little bit more IT, a little bit more AI there, here and there. Speaking of which, Talent Corp also is being mandated to execute the AI programs to actually work collaboratively with Kasuma and Kementerian Digital and so on. So I actually see where all this is coming from. But you know, there's also fun things, not fun lah, I guess. Socially empowering things like 4,000 ringgit to dispose of old vehicles. You know, I have a nice story here. When I graduated from university, I bought a very nice Kia car for about 40,000, used it for 10 years. It became a besi buruk lah by the time of its shelf life. I didn't know where to dispose of it. I really didn't know.
Okay.
I had a chat with a friend over at Kedai Mama. You know, we spoke about billion things, just like two friends over Kedai Mama would do. And then, you know, the question of, hey, how do I dispose of my car? Because it's already karat, you know, with the lobang there and everything. He said, oh, you just use custom. And, you know, at that point in time, this was 10 years ago, I didn't know what custom was, you know, and the assayer came over, assessed the car, took the car off my hands for 2,500 ringgit. It's amazing. I was thinking of me paying custom to take away the car, you know what I mean? But the fact that they want to offer money to take away my car is also an awesome thing.
Right.
Then, over the years, I realized that for high-density areas, especially urban areas like flats and, of course, PPR and move on to, you know, high income condos like Monkiara, for instance, you know, so many of these old vehicles. And clearly, when the government gives 4,000 ringgit incentive for you to dispose of your old vehicles, I think this is cheaper than, you know, asking a Bandaraya Tempatan or whatever to actually dispose of the car. So things like this, does you see this as helping, you know, not just the rakyat, but actually beautifying our urban places as well?
Well, I mean, from that angle, I will kind of like agree. Yes, it's a good initiative when they come up with this scheme. And if it's done effectively with a proper kind of a planning and all that, and with the support of everyone, I think that objective can be achieved. But speaking of training and upskilling that you mentioned, this budget, I think from the tax angle, there's this tax incentive for training in AI.
Yeah, which is also, before you jump into that, let's ask the question. So businesses, I think moving from individuals, we now move to businesses. There's tax incentives for training in AI and addressing operational bottlenecks. Claims can be done, but they require Talent Corp approval, I suppose.
Yeah, that's right.
3 billion ringgit of HRD Corp training funds are going to be disbursed because of this. And many more. And of course, Yayasan Peraju is, of course, a big deal in terms of trying to help in this space as well. All this, do you think businesses are going to be able to, I guess, work towards and get these kind of incentives to actually upskill their own people?
Well, I look at it, I think it's a very positive move from the government to initiate this. Because when you look at it, when the whole of the country, we wanted to push for AI and digitalization roadmap. And I think this is one baby step that we could actually promote to the company, especially the MSMI. But I think the ground reality here is, are we going too advanced to even talk about AI? Are all the MSME even ready with the digitalization at the very basic? It will be good. I would like to see perhaps not jump into AI, or rather this should include not just AI, but include the basic digitalization, right? Because that would then perhaps encourage more, in particular the MSME to participate. But the wording in the proposal talking about 50% tax deduction once in 2 years. I would like to clarify further, what does it mean by once in 2 years? Is it a situation where a company is allowed to actually choose which particular year that they want to claim, or which particular year that is more beneficial? So there is something that is rightfully we don't have that details, but it's good, perhaps in my view, to give some kind of flexibility. Then people can actually maximize more. And the sound, Ibrahim, you just mentioned about talent corp, bottleneck and all that. I think that is reality. Right now, we do not know how that administrative process is going to be. Perhaps one way to overcome that could be setting up some sort of pre-approval mechanism in place. Then this would definitely facilitate. Otherwise, with these administrative challenges, that may actually discourage more companies to come forward and claim.
Yeah, still on businesses. Business tax or corporate tax was barely mentioned. No changes there.
Yep.
GST doesn't seem to be in the air.
Yep.
SST seems to be at a holding pattern of 8%, with no indication that the SST coverage is going to be widened. So I don't know about avocado and all the other items going to be put in place.
Yeah.
So for businesses, I think this is a very budget-friendly, a business-friendly budget, no?
Oh yeah, from that angle I would agree. But of course, if you look at it, the government also have mentioned a few, such as new investment incentive scheme, where encourage more companies to come forward. In this case, they have mentioned about manufacturing and the service line to change rather the way how to claim this incentive more towards the outcome base. So to me, this is to attract more quality type of investment to come in. So of course, in order to do that, we are talking about compliance, where company who have proper procedure to monitor all this and go into the right framework to claim, I think they can actually get the most benefit out of that. Whether the question is whether for MSME, where their resources are limited, whether this will pose more administrative work rather than just, unlike in the past, where you can claim those incentives either based on your product or based on your activity, and once you submit, you get the approval, and that's it.
Yeah.
But now you need to actually track it. You need to actually monitor it. Yeah.
I mean, bandwidth is one thing for MSME, but there's also competency.
Yeah, that's right.
So then, you know, you're not really seeing an uptick there, because if they don't have that competency, they have to hire folks like KPMG, for instance, to do their accounting with them.
I'm happy with that.
But what is the reality here?
Yeah,
I don't think they can. So I don't know whether we're going to see any uptick there. But in that sense, this might work with larger companies.
True.
Yeah.
Very true.
And of course, GLCs, GLICs, I suppose.
Yeah. 2 points I would like to add on that is also good to provide this certainty to the company would be, what happened to those companies have already gotten some sort of incentive? Now, with these changes, what happened then?
Yeah.
So it's still...
You mean, is it going to run concurrently?
Is it going to run concurrently? Is it going to replace?
Yeah.
Are we seeing a transition period that to phase that out?
Yeah.
Still not sure yet. The other thing is those companies who actually enjoy the Pillar 2, right now, would there be any... is this incentive something that can replace? We are still not sure, you know, whether how can it make available to their current incentive that no longer provide some sort of this tax benefit. There will be this few question mark, and we would like the guideline to be out soon so that it provides certainty to taxpayer.
Let's talk a little bit more about the segmentation of growth by sector. You touched a bit. Agriculture, we're seeing a forecasted of 2.2% growth compared to 1.2%. Manufacturing is decreasing year on year, 3.8% last year, this year versus 3.0% projected for or forecasted for next year. Services is about the same at 5.2, 5.1%. construction is going to see a major decrease from 10% to 6%. And with this, why I'm bringing this up is because next year we're going to see Visit Malaysia Year 2026.
Yes.
We're going to see a lot of companies, especially in the services sector, more precisely in the hospitality business, perhaps even in the transportation business, to drive up beautification and improvements on their facilities and capex. With this, the government has allocated a 500,000 ringgit renovation expense tax relief, I suppose, to be capped at 500,000. So what should businesses be looking out for on this front?
Yeah, I think this is more focusing on those tourism projects. My view, this is very helpful where, however, businesses must also be careful before they actually claim it. I don't think it's talking about spending. It should be looking at the compliance, where they need to keep proper records and all that. Again, we don't have the details now, but if I were to compare it to the post-COVID, where they allow renovation costs to be claimed. So if I were to draw parallel to the past, take note, in the past they require the certified by external auditor. So it's not as simple as I just claim it, you need to be certified. There will be list of eligible costs. What are those fitting, what are those lighting and so forth. They also spell out those ineligible costs as well. Mainly are those professional fees and the other important is a claim of timing. In the past, they will look at when the services is performed rather you pay. So these are the things that I think businesses should take note of. But looking at this sector, just now I did some research. When you talk about claiming this renovation by the tourism project, you're talking about those operator that must register with MOTAC. So currently, based on 2022 statistic that I have, I think it's only about 4,766 companies that actually registered with MOTAC.
It could be slightly more now.
Could be slightly more now.
But still within that range.
Exactly, exactly. So again, we are just talking about these limited numbers. So it'll be good to see whether just not the company that registered, but able to substantiate that they are actually promoting this, will be given a chance to claim as well.
The impact, therefore, might not necessarily be so substantial, no?
Yep, totally agree. Totally agree.
But I guess a little bit here, a little bit there adds up to the big idea.
Yes.
Now, this is one of the biggest items that I want to explore, which is the stamp duty reform. This is one of the key factors of how LHDN makes money. And you know, while we're seeing the 2.7% tax revenue increase, stamp duty reforms are also being announced. How does this tally between these two, I guess, opposing statements? And what is your take on it?
Sure. Probably I would like to mention that I don't think is what LHDN want to make money on this. The way how I look at it, if you look at the development of the Act, stamp duty is the last Act that have not gone for self-assessment. The rest of the Act has already gone for self-assessment. So now there's a comparison between official assessment system and the self-assessment system. So if you understand a little bit more, under the official assessment system, where taxpayer will bring whatever document to Hasil and say, please stamp for me. And it's actually Hasil's duty to determine, number one, is it stampable? Number two, is it what is the rate to be applied? Now with self-assessment come into play, it's a shift to the taxpayer. So taxpayer now got to actually determine whether is it stampable or not. And because of that, I think it triggered a lot of questions as to like, is this something that's stampable? In the past, I have never stamped before. So all that coming, and my understanding for this year before self-assessment, Hasil has carried out friendly awareness stamp duty audit. And that itself...
So what does that mean, friendly?
Friendly
as
in the
opposed
sense,
to hostile?
Friendly in the sense that they come in with education, trying to actually let the taxpayer know that whatever they have not complied, they must comply way forward, and they are quite flexi in terms of the punitive...
A bit of an amnesty as well.
Amnesty as well. So to be fair to Hasil, I think there's this good move, good initiative. This budget, how it complement, I see there are some exemptions, there are some reduced rates for the first-time buyer and SME. Now, all this, I suppose, is good, but of course there are rooms to enhance. I would like to touch on two areas. I think in this budget speech they mentioned about employment contracts, where the exemption has now been increased from 300 to 3,000. Of course, we can debate about it because 300 that was fixed, it was in 1949. Now, 2025, is it equivalent to the category of 2,000?
Yeah.
Maybe now the figure could be more,
Yeah.
perhaps. But anyhow, I would like to thank the government. At least they listen. They still increase to 3,000 as a start. Now, that itself, from that initiative, I trust that it can take off a lot of this administrative work from the particular company. But again, issue come in will be, even though it's exempted, is it still very clear that exempted documents still do not need to be stamped? You see, this is exempted.
I would assume so, no?
Yeah, still need to be stamped. That is where we want clarity.
But so because I assumed
but the understanding here is, when we look at the 1949 Act, currently it has not been revamped yet. So there's a provision there to suggest that even though it's exempted, you may still need to stamp and get it exempted. So the administrative work is not being lifted from that. Employment contract, there will be also question is to, would it be the first employment contract to be stamped, subsequent renewals, subsequent promotions, subsequent
whatever
lah, even up to termination. Does it still fall under this specific rigid definition of stamping? Of course, my view is if it's related to one, then it should not.
Yeah, but that's your view.
Yes, my view. Exactly. Correct.
If it's not clarified,
then
my view is different from yours.
Exactly.
And then both of us go to Hasil and we have a different expectation.
Correct. And then when you're talking about businesses that involve short-term and ad hoc workers, this can be viewed as non-employment but more service agreement type. Then the rate is not 10 ringgit. It's 0.1%.
Like casual worker lah.
Betul. Then it's 0.1%. Then the question is,
are they applicable or not?
Applicable, then of course you're talking about the amount. Imagine now self-assessment, I need to calculate and compute and pay. Same goes to director's appointment. It's a service agreement. 0.1%. So that is on employment. So there are many questions that still unanswered. I believe most taxpayer wants to comply, but they just need clarity.
And now, of course, I'm sure LHGN or whoever is going to...
Yes, that's right. I still have a few points when you talk about self-assessment. In fact, our wish list here is to ask the government to consider pushing the self-assessment to a later date, so that perhaps that gives more taxpayer more time. But of course, we can understand that it may still have to go on. I think it's fine. But I think what is important, greater details of guideline to be issued. Many businesses right now, if you look at it, you ask them about stamp duty rule. To most of them, they will say, these are all new rules. But in fact, the law is already there from day one. It will be good for the government to consider waiver or penalty at least for 1 year in this process of self-assessment. And how do we want to promote voluntary disclosure program for them to come forward for past record? So I think what is important, let's move forward rather than go back, you see. And of course, the other one is, if you look at what the government currently trying to implement into 3 phases, 26, 27, 28. 26 phase is actually quite broad. So our suggestion here is maybe we can start off with a more simple, like tenancy agreement first, then let people will settle down how the law applies, then only you apply. 3 important points is that even the current law, Section 35A, still not very clear about who is responsible for submitting the returns. So is it the same person that is liable to pay the stamp duty to submit? Right? Now, what happened if both parties agree and say, tak apa, I yang bayar? Then how? I think the law doesn't provide that. In the event of audit under self-assessment, who does IRB want to go after? Especially in the case of non-resident, for example. So that part is not clear.
Which is going to be a big topic if you're looking for this type of contracts.
Of course. And the last important one, under the service agreement, we have this third schedule that only refer to obligor as the liable party. Now, a lot of interpretation about this. Does it mean that the party who is paying for the service means obligor? Or is it the party that provide the service? I think taxpayer wants certainty. So these are the things that may impact businesses if this certainty are not being achieved.
Do you think that the timeline is going to be very tight in terms for Hasil to come up with the guidelines because 1st January is just around the corner?
Yeah, we are just hoping that the guideline can be out within this month, perhaps. Then at least you still have 2 months to digest. Even that also to communicate with the relevant stakeholder, it would definitely take time as well.
All right, if you've missed any part of this interview, just head on to astroawani.com. You can also check out all the coverages that we've been giving over for Belanjawan 2026. Just search for Astro Awani Belanjawan 2026. Until then, thanks very much for watching and catch you in the next one. You guys have a great week ahead. Thanks for staying on with us. I have with me the head of tax of KPMG Malaysia, Soh Lian Seng. So let's talk a little bit more about the macroeconomic outlook. We will be talking about the new investment incentive scheme. But it's worth noting that Malaysia's approved investments between 2022 and 2025, at least for the first half of the year, has shown a year-on-year increase, especially for the first half of this year, 18.7% year-on-year to 190 billion. Despite global uncertainties, we are still attracting investors coming in. And these investments are expected to be realized, particularly in key sectors such as semiconductors, renewable energy, data centers, and the like, many of which we have discussed a bit here. And of course, many of the shows out there have been discussing that the incentives hitting these kind of segments and sectors are actually quite promising. Right now, MIDA, I suppose, will be issuing guidelines on not just the new investment incentive scheme, but of course, outcome-based incentive framework. What kind of details are you looking at when it comes to MIDA coming up with this framework or guidelines?
Yeah, at the moment, we don't have the details yet. We are still waiting for MIDA to come up. But I think one comparison that I can give, perhaps the last 1-2 years, if I'm not mistaken, the budget came out with a revised green investment tax allowance, GITA or GITE, where they set out a different tier where you need to actually claim this incentive. I think in terms of the revised GITA or GITE, they talk about tier 1, perhaps in the category of EV, tier 3, perhaps in the category of solar. The differential would be in terms of the duration as well as the percentage of utilization. What I would expect, maybe slightly more detail here, would be how do we then track, or how does the taxpayer need to track some of this performance, you know, when they come out with this, when they enjoy this particular incentive. And I can only visualize that documentation become important whenever there is Hasil's audit or Hasil verification. We need to then demonstrate that the company actually fulfill those KPI that has been set in advance.
One of the reasons why we're looking at this as well is to perhaps understand on the company's side of things. When they invest in a particular country, they want to grow that particular business in that particular country, reduce costs, increase revenue, and trying to diversify their market mix globally or if not regionally. It also supports the idea of the inclusive framework coming in from the OECD on the base erosion profit shifting or BEPS, especially on Pillar 2 when it comes to global minimum taxation. Do you feel that there would be some clarity coming in from MIDA's framework to talk about BEPS Pillar 2 with these kind of elements here that we are now raising, especially on the investment side?
I can only say I really hope so, because I think for the past
cannot like that. You can't just hope. I mean, hope and pray is one thing, but okay, put it this way. Let me rephrase.
Okay.
What kind of guidelines are do you want to see coming in from MIDA on this front?
Okay.
Your wish list.
Yes. I would like to see when we talk about the Pillar 2, for example, the outcome-based incentive, how would they then actually make available to this company who coming in and also trying to get, who have perhaps lost the tax benefit. You know?
Okay.
Yeah. So if you were to compare to other countries, for example, there was this type of incentive where they actually give back certain grant because if you need to pay a minimum amount of tax, they will give back this certain grant. The question is, this is my wish list to see that to be more competitive in this region, then if Malaysia can adopt the similar mechanism, that would be good for investors.
Sorry, is it being applied elsewhere in other markets?
In Singapore, in Thailand, yes.
So I guess if we're slightly behind lah, because we just need to execute what our markets, our neighbours are doing, then we'll be just fine.
That's right. That's right.
All right, let's now talk about the carbon tax, the only one new tax that has been mentioned outright. I spoke, of all people, to the New Zealand Prime Minister last week on carbon tax. Yeah, crazy, right? He's coming over for the ASEAN summit later in the month, and the New Zealand Prime Minister was actually applauding Malaysia's move on the introduction of carbon tax. But he also mentions that every country moves at their own pace, and they have, while everybody should be cognizant of carbon emissions and improving on industries on how it can be done properly. We were talking at length about this being needed, but on that front, I was trying to understand the Belanjawan 2026. When it comes to carbon tax, it is not just steel and iron, if I'm mistaken. It's also energy or energy emission. So how do you see these details coming in? Do you want to see more clarity when it comes to the carbon tax being a tool to actually improve on our energy mix, for instance, reduction of coal, for instance, these kind of elements? Do you see that as a mechanism to actually shape industries rather than try to get revenue out of it?
Yeah, I think the budget speech doesn't give much details of that.
Which is fine, because I suppose details should come later. As you're right, the implementer should be thinking about the framework and the guidelines.
Yeah.
Policy will be set at the budget.
Correct, yeah. My view here is, I think when you talk about announcement, it's not just policy. Question is our ecosystem ready? Right? Because when we talk about carbon tax, number one, it's very important that we must have a system that able to measure.
Carbon account, carbon account.
Right? Yeah, carbon account, measure. Because here, even though, yes, we start off with the steel industry, energy industry, there is a start, I think it's fine. Yeah. We can go by phases to other industry as well. Number one, I think is a measurement. Number two, even say we have those data, whether this industry that you just mentioned, do they really need a robust system even at the implementation level? Which right now when you look at companies, they probably will need time to actually beef up those systems, those data, in terms of that. Second, who is going to verify the data? Are we ready with a pool of accredited person? Right now, that is also another point to consider. And the third point, my view, while you can have a data, assuming you have a pool of accredited person, how do we then monitor then? Monitor of this progress. It'll be good, of course. Yes, you go by phases of implementation. Ideally, this is not supposed to be a collection of taxes. If you want to promote this, whatever carbon tax that is collected, ideally will be channeled out to support those other industries that need this implementation. It can be by way of grant or loan, perhaps, to support. And last but not least, how do we make our business more competitive? What is important is, is the proposal of the carbon tax is clear enough that we are able to interact with the EU CBAM.
Yes.
For example, ideally would be those tax that has been recognized or credited, that are able to reduce those CBAM charges that impose on the Malaysian export to those EU.
But EU CBM is the Carbon Border Measurement Approach.
Adjustment mechanism. That's right.
And I think only Singapore is looking at this. I'm not too sure about other markets, especially Thailand or Indonesia. Perhaps they are at the same starting point as ours.
Yep.
But this, my argument is, we do this first, and then we can comply and try to measure up accordingly as the time goes by.
Yeah.
But this is a good start, no?
Yes.
And it does create that environment where, or ecosystem where businesses are now pushed to do this, and professions or at least competencies like carbon accounting has to come into play.
Correct.
And try to see how we can comply maybe 5-10 years down the road.
Yeah. So my point here is, you're right, Ibrahim. That is a good point. So as a start, while we can have all this measurement and all in place, we must always have the alignment with this EU, or rather example of the EU thing, rather than we perhaps implement our own policy. Then later on, we start to realize it's not aligned. Then you got to adjust back. So since we know the overall objective is to achieve that, so why don't we look at it holistically in terms of that?
Okay, I guess we can cap off our conversation with ASEAN. There is this ASEAN business community aspect that has been brought in by the Prime Minister, of course the Finance Minister as well. Simplifying investor processes through new ASEAN business entity or ABE status. It is meant to facilitate the movement of skilled talents over here. Investor pass with multiple entry visa facility for prospective new investors in key sectors such as semiconductor. New outcome-based incentive framework for manufacturing services sector is also being mentioned. What are your thoughts on these items?
I think this is a good, I would say, promising move to help, in particular, the Malaysian listed as well as a mid-sized company to expand across the Southeast Asia. And I think with the current uncertainty from the tariff point of view, this is something perhaps is a good initiative that within ASEAN, how can we actually work together to build a marketplace for ourselves. While it starts off with skilled workers that can move within ASEAN, my thought of this is that it would be good also to expand the collaborative effort to include the preferred tariff code among the ASEAN or among the...
I'm sorry, I'm unfamiliar with this.
For example, like when you export to another country, that you could be being imposed with a tariff within that. Ideally, we'll be having a preferred tariff code among the ASEAN so that we are being more competitive in terms of that.
Okay.
That could be maybe...
This is a mechanism that is...
I don't know yet, but this is my wish list in terms of that, rather than just make the skilled worker move around easily. But I think we can go beyond that, looking at tax. One of it is tariff, right? To have a consistent rate so that we can go to the market.
Perhaps even absorb the shocks coming in from Trump or whatever.
Perhaps, yeah. So this could be one that we can promote regionally, this collaboration.
And as well within our powers, I suppose. ASEAN Summit is in store in KL.
Yep, that's right. So that would be one wish list I could see. If we can do it rightfully, this would be a very powerful tool to promote this collaboration.
Sorry, this is, you just inspired me with another argument, because in the EU, not only do they have free labor movement, you can, if you're born in Italy, you can work in Sweden and pay rent in Germany, you know, that kind of thing. But the income tax rate is actually quite uniformed. So you can't evade one EU jurisdiction just because you want to have a lower tax rate with another jurisdiction.
Yeah. That would require more discussion, I suppose, because...
but you know, if you do things like this, preferred tax rate, regionally, free labor movement, it all adds up to that at the end of the day, right?
Yep, that's right.
And then only we can call ourselves a regional bloc.
Yes, totally agree.
Nice.
But at least as a start, I suppose the tariff could be something that is easier to implement. Whereas you talk about the income tax, well, we have a DTA and all that that require more time to harmonize some of this.
Because tax residency is already a big issue amongst our members. No, but if you want that, you got to have this. This is more of a prerequisite, I suppose.
That's right.
Oh,
that's
interesting.
Right. So that will be my wish list, the way how I look at it on this ASEAN bloc.
Okay, you've been covering budgets for half your life. How's budget 2026 overall? Recap.
I like to see that or this budget appears to be more of trying to build trust through tax as a tax practitioner, right? But one thing I would like to see further will be, please, guidelines, finance bill, engagement, would like to see it to happen soon, so that we want certainty. We want to see what are the details, so that the benefit to businesses, taxpayer, can be determined, and all of us want to pay the right amount of tax. So the way how I see, not just announcement that is important, the execution, right, and also clarity. That would what I view 2026 budget.
If we were to do this interview next year, I think the conversation will be slightly different, because then it will be budget election. I'm realistic, Mr. Soh. So it is what it is. Every 5 years there will be one budget. There will be
budget election. Yep.
But this isn't it. It doesn't look like it. All right. If you've missed any part of this interview, just head on to astroawani.com. You can also check out all the coverages that we've been giving over for Belanjawan 2026. Just search for Astro Awani Belanjawan 2026. Until then, thanks very much for watching, and catch you in the next one. You guys have a great week ahead.